What's up, boys? New video today. I wanted to talk about something that I honestly think is very important as a trader, as a beginner, something that I've have been learning as of recently, something that I've been improving upon, and that is building discretion as a trader and just how to develop that market intuition. Okay. So, what discretion actually is. Discretion, it's basically just judging, the market overall, trying to get more context out of it beyond just the mechanics, beyond just like the rules of like, okay, one, two, three, I'm waiting for this, and this, okay? So it's more so reading market conditions, market, structure overall, not just certain patterns, IFG or anything like that, okay? So the reason why I think it's important, discretion, is it basically shows you and tells you, or at least gives you a better understanding when to, I guess, take a trade and when it's best not to. Okay. So, why discretion actually matters, like I said, the markets shift daily. You won't have, an exact pattern or an exact specific trade or setup every single day. Okay. That's not going to happen. Maybe you'll have certain patterns, certain, movements within the market that look similar, but it's usually not every single day. It's usually not the exact same thing happening every single day. In a broader standpoint. Okay. So, mechanical setups miss real-time conditions. What do I mean by that? Sometimes you have a mechanical setup, you have a sweep of liquidity, or you have, I don't know, whatever, tap into a 5 minute, right? Tap into 5 or 15 minute, and you take like a continuation on the 1 minute, okay? You can do that, but when you look at the broader standpoint, like I said, on the 15 minute or hourly 4 hour, you can see we're ranging hard, okay? So that's another thing we're going to get into. But when you see that the market isn't necessarily going within any sort of direction, but it's just going up or down, up or down, up or down, up or down, what is that going to tell you? There is a higher chance of that trade not playing out, or there's a high chance of you just getting stop rated, going back down, stop rate, whatever. Like, I think you guys understand what I mean. Like, when you're ranging and you're just chopping like it's a barcode, there's a higher chance, or more so, there is a lower probability of your trade actually playing out. That's more so what I mean. So it's building that discretion that tells you, okay, I understand that the market is in this certain condition, so it's best that I'm just not going to trade it like that. And then you have other scenarios where it's like, okay, the market is probably in one of the best conditions to take something. Now I'm really confident in taking this specific setup. Okay. So all I really mean by this is discretion is protecting you from low probability environments and trades in general. Okay. So when a setup is still a bad trade. Okay. Like I already said, the environment isn't stable. Price is ranging. It's a full barcode. It's like you can scan it and it'll probably scan for something. Okay. There is no clear direction. That is something that I've been trying to understand and comprehend more, or just more so implementing that within my trading. And that's only trading or only being confident within a trade when the market, on a higher time frame basis is moving within a certain direction, whether that's bullish, bearish, whatever, but it's just respecting that sort of order flow. Okay. So news distortion, not too big, but also, just be careful with that. It's not the biggest thing. Like, I don't care too much about news unless it's like CPI or anything like that. But just be not apprehensive. Just be careful, okay? And yeah, all these things they'll tell you. They'll once you build that discretion, it'll show you. Okay, maybe it's a good time to take a trade, and maybe it's a bad time to take a trade, or whatever. Okay, so developing discretion, these are a couple of things that I believe that will build your discretion. Mind you, it's not something that you're going to build immediately. This is something that takes time, takes screen time, especially, experience within the market, seeing how, the market moves overall. Journaling, I think journaling could help you, especially as a beginner. Maybe like once you're already advanced, which I wouldn't consider myself advanced. I would say, in my opinion, I'm intermediate, but because I already have experience, everything within the beginner standpoint, and I'm just in that intermediate phase. But I haven't been doing this long enough to be like, okay, like I know everything. I'm learning while I teach. This is why I'm giving you guys these videos, because it also helps me learn at the same time. This is something that maybe at first I struggled with, but now I would say that I'm pretty good at building that discretion and knowing certain conditions when to and when not to trade. Okay, so I would definitely recommend journaling. What does that mean? Just whenever you take a trade, whether it's a win or a loss, you say, you take a picture, a screenshot, You write like a paragraph down, nothing crazy. You just say, okay, I took this because X, Y, and Z. Market was, overall respecting bullish order flow, whatever, blah blah blah. And within time, especially if you have those pictures and screenshots, you can look back at that journal and be like, okay, I'm noticing certain patterns and I'm noticing, certain ways in which the market is acting in those conditions. Okay. So that not only helps you mentally to be like, okay, all right, now I'm starting to see kind of some a pattern, I guess, or like I'm recognizing certain ways in which it moves, but it helps you financially. So yeah, so just study those setups within, those journal within you journaling, and also real time. Nothing beats real time. You don't even have to trade. You can be forward testing. So you just paper trade. You don't have to risk actual money. Maybe do this for a bit when you're a beginner. 2 weeks, just paper trade. Understand certain ways in which the market's moving, and yeah, just training your eye for good quality, not only setups, but just whether or not you want to continue sitting on your chair and looking at a computer for another hour, or if you're like, okay, the market is just in a position where it's accumulating, so it's best I just step away because me staying here any longer probably is going to detriment you. It's not going to be good. You're just going to get analysis paralysis. You're going to start seeing candles and be like, all right, let me take something, even though my discretion is telling me not to. Okay. Final thing that I think would help you a lot, within building discretion, if you are a beginner, that is backtesting. Okay. Backtesting, it's good. It's a good thing. Some people hate on it. I do think that if you are a beginner, backtest as much as you can, for a bit. I wouldn't say don't get overly obsessed with it, because then you'll get some sort of analysis paralysis, but then like it'll start controlling you, and at the same time, like, you want something to do that's not just backtesting. I had that period when I was learning in which I was like backtesting every single day, whether that was like a week to 2 weeks worth of data every single day, so like an hour and a half. But there comes a point where it's like, once you understand and once you've built this discretion, it's okay to like backtest maybe 2 times a week or even just once a week. At that point, like, you're completely fine. You don't need to backtest every single day. Backtesting is number one, a thing for beginners to build out discretion, understand your strategy, tweak certain things within your strategy. And then once you're intermediate or even advanced, it's more so of like a reminder, kind of like a refresh, just to make sure you still kind of understand, see if there's anything you could still fix, because, there's always something to learn. For me, it's discretion. For others, it's, I don't know, like risk management. But there's always something to learn. So at least as a beginner and maybe even intermediate, I would recommend to backtest. I think it's extremely important. Whether it's TradeZella, whether it's TradingView, it doesn't matter. Just backtest. I think it's super, super, super important. Okay. So combining mechanics with your judgment. What does that mean? Rules give out structure. Rules give out certain, pinpoints. It's the foundation. Okay. Rules, and by rules I mean like your mechanics of it. Sweep of liquidity or tap into 15 minute and then take inverse off the highest time frame. Whatever. It doesn't matter the exact strategy, but you get the gist of it. Those are the rules, those are the mechanics, and that is the structure and the foundation, okay? But discretion and building that discretion filters out the noise, filters out the good setups and the bad setups. It makes you understand and comprehend what you should and what you shouldn't take. It's super simple, okay? So it's just a smart filter that essentially helps you prevent losing more. That's all it is, where you can win more and lose less, right? So benefits of discretion and building discretion: fewer unnecessary losses, highest quality trades, higher confidence, and just adaptability overall. What do I mean by that? I mean, it's super simple, just building that discretion. I don't want to bore you guys, so it's, like I said, it's very simple. You win more and you lose less. That's all it is. It's detecting certain setups that are better, and certain setups that are, worse and that you shouldn't take. Because once you have that discretion, you understand, okay, this is a setup I shouldn't take. So if I were to take this and I do lose, then it's my fault. I understand that, like, I shouldn't have taken that. So even if you have that discretion and you still take that trade in which not to take because, the market isn't looking too good or whatever, that's on you. That's your fault. You deserve to lose. Okay. So last but not least, my final message to you, at least for this video: the strategy that you choose, whether that's ICT, SMT concepts, or I don't know, like footprint charts or whatever, it doesn't matter. That starts you, but it's really the discretion and the comprehension, if that's a word, or the understanding of market conditions and just filtering more so. I think that's the key word, filtering. That's what really makes you profitable. Obviously, aligned with other things like your psychology, risk management, but this discretion in a technical aspect, this is going to help you a long way. Trust me. Okay. So refine your eye, not just your rules. Refine both of it. Doesn't matter. But that's basically it. My final message to you is really learn how to build a discretion, and you will succeed tenfold. Trust me. Okay. So let me expand this, John. Okay. All right. Thank you guys for watching. 3 videos this week. We'll see if we pump out another or just do 3 videos a week in general. But thank you guys for watching. I might post a video either tomorrow or the day after. So we'll see. But that's basically it. Thank you guys for watching. Talk to you guys soon. Peace.